Hi, have a nice day, ladies and gentlemen. Behind the screen, I am Tran Tien Loc, majoring in Business Administration in International University. Mobile payments are no longer a futuristic concept, they are embedded in our daily routine. Each year, in the United States alone, mobile payment systems handle trillions of dollars in transactions. But underneath all of that easy convenience is a strong competition for dominance. Big tech firms, fintech startups, and traditional banks are all fighting for control of our payment methods. Today, I will walk you through this competition by answering 4 key questions. What are the 3 types of mobile payment and how do they differ? Which age group are the most likely to adopt mobile payment apps? Why? Why have the fintech startup had a hard time competing with the tech giants? And what is Zelle? Why has it grown so quickly in the last few years? By looking at these points, we will gain a clear picture of where mobile payments stand today and heading next. Let's start with the first question. The first category is the universal proximity payment, such as Apple, Google, and Samsung Pay. They rely on NFC, which allows users to tap on their phone against a payment terminal to finish a transaction. This method is secure and quick, however, its expand has been slow because many merchants still don't have NFC-enabled terminals. So even though the technology works well, the infrastructure isn't fully in place. The second category is branded proximity payments, like Walmart Pay and Starbucks apps. These apps work only at a specific retailer location, but they bring benefits such as loyalty points, targeted promotion, and valuable customer data for the company. Starbucks, for example, now has nearly 33 million active app users, more than most United States US banks have on their mobile platform. This highlights the power of linking payments directly to the customer loyalty program. The third category is the P2P payment, which includes services like Venmo, Zelle, and Cash App. This platform allows instant more money transfer between individuals using only a phone number or an email. They have effectively replaced checks, cash, when splitting a bill, paying rent, or settling a small debt. P2P has become the largest segment of mobile payment in the US, with around 60% of smartphone users participating. So to recap, the universal system serves broad merchant transactions. The branded system reinforces the customer and retailer relationship, and P2P system focus on fast person-to-person exchanges. Next, the answer for the second question is clear. Millennials and Generation Z are the forefront. More than 70% of millennials use P2P apps like Venmo, while fewer than 40% of baby boomers do. The younger generation, who grew up in the digital age, paying with smartphone feels more intuitive. Convenience matters too. Sending money to a roommate or splitting a restaurant bill takes a few minutes. The COVID-19 pandemic further pushed the adoption, as contactless payments were seen as safer than handling cash. Yet, overall, the adoption has been as fast as predicted. Even tech-savvy users often fall back on debits or credit cards. Why? The NFC terminals are not universal. Second is the cards are accepted everywhere, as it is familiar and trusted. Lastly, the long-term spending habits are hard to change. These generational differences show us that adoption isn't just about being willing to try new techs, it also depends on which company has the resources to push their solution into the mainstream use. Come to the third question. The reason of the struggle here is the scale, the trust, the resources, and the acquisition. About the scale, Tech giants like Apple, Google, and Samsung own the hardware and operating system. Their payment apps come pre-installed and instantly reach millions of users. Finance relies heavily on trust too. Users are far more comfortable linking their accounts to Apple or Google than unfamiliar startups, so they must try harder to prove safety and reliability. Next, tech giants like PayPal or Square already have massive user bases. They tie with banks and retailers. It is an advantage that a startup doesn't have. Lastly is the acquisition. Even when fintech startups succeed, they are often acquired. Venmo itself was bought by PayPal in 2013, becoming part of the large ecosystem. So to sum up, fintech may create breakthroughs, but giants hold the platform, user trust, resources required to scale those innovations. Finally, what is Zelle and why has Zelle grown so rapidly? Zelle is a peer-to-peer service created by a coalition of major U.S. banks, including J.P. Morgan Chase, Bank of America, and Wells Fargo. When using Zelle, all users need is an email or a phone number. The money transfer is completed within minutes without costs. Its growth can be explained by several key factors. The first is the integration. Customer didn't need to download any other apps. Zelle was added directly into the banking apps. This level of integration goes far beyond what most competitors offer, so it will be strengthened to the trust and the security of the customer. About the speed and cost, unlike Venmo's early models that require overnight transfers, Zelle transfer money instantly and for free. Lastly is the scale. Zelle now connected to over 10,000 financial institutions with Visa and MasterCard, making it available to millions of users. There is a limitation. Zelle currently cannot be used at point-of-sale system with NFC. That leaves tech giants and branded apps on edge at checkout counter, but in the future, Zelle could add this capability. By 2021, Zelle has already processed more than 365 billion of transactions, compared to Venmo is only 210 billion. Today, with roughly 62 million users, Zelle accounts for more than 40% of US P2P users. This reflects an immense power of banks can wield with the combined trust, scale, and digital tools. Finally, in conclusion, here is what we have learned. Mobile payment fall into three categories: universal, branded, and peer-to-peer. Millennials and Gen Z are driving early adoption, but overall use is still slow than expected. Fintech startups drive innovation but face these disadvantages against tech giants that control devices, platforms, and trust. Zelle demonstrates that traditional banks often assumed to be slower movers can leap forward by leveraging infrastructure and integrating payments directly into daily financial lives. This brings me to the end of my presentation. Thank you for listening, and I hope it will give you a clear perspective on the current landscape, the challenges, and the future of mobile payment. If you have any question, please feel free to reach out via email or in person.